Hello, good morning, good evening, good afternoon, wherever you're from. This is Keys and Conversations, our second episode. I'm Shalita Thompson with Keller Williams, The Marketplace.
I'm Latasha Whiteside with Worley Real Estate.
Welcome, everybody, to our second episode. We're so glad that you're here. Um, we've got a great show for you today. But before we get started, Latasha, how you doing?
Girl, I'm good. I was down and out, man, down cold 10, girl. I'm sorry
Man,
about the delay of the second episode. Your girl was down. We are.
yes. Well, I'm glad you're back and feeling better.
Thank you for that. Appreciate
Yeah,
it.
let's dive into it. So, today we're going to be talking about various different down payment assistance programs that are available here in the Valley that you may or may not know about. We'll cover some various different lending options that you may have heard of or not heard of. We're going to give you some good information today. But disclaimer.
Disclaimer, we are not lenders. We are professional real estate agents only. This
Yes.
is just for educational purposes. But we have some great lenders that we can send you to when you're ready.
Yes, absolutely. So I'm going to touch on four different programs. The first one I'm going to touch on today is the Culinary Housing and Bartenders Housing Fund. And a lot of people don't know about this program, and it offers up to 30,000 in down payment assistance if you are a culinary union member as well as a bartenders union for the local 165. And so, obviously, to qualify for that, you got to be a part of the union, have up to at least 2,000 hours of service within a 3-year period, and then obviously reside within Clark County or Nye County. So, certainly, if you are a culinary union member or a bartender union member, or you know someone who is, definitely share this information with them because, again, they may not know about it. And if you need more information about this program, definitely reach out to
So I
me.
have a question. Is it a
Yeah,
cap on this or it's just all the time?
all the time.
Okay.
So there's no cap on it, right? So if it's your first time buying, definitely look into this program. I actually know someone who was a union member, didn't know about this program, bought their home, found out about it later.
Wow.
So I don't want anyone else to be in that situation. So that's
Absolutely
why
not.
I'm giving the information. So if you know someone, share that information with them, or if it's beneficial to you. Um, Second program that I'm talk about is the Wish program. And this program, it's a 4-to-1 ratio, which meaning the program they offer $4 to every $1 that you contribute, right? And it's really a program that benefits people who may have income challenges.
Hmm.
Again, we want to make home ownership possible for everyone. So another program that's beneficial if you need that. Third program that I'm going to talk about is the Nevada State Bank Affordable Home Mortgage Program. And so this one it's a lender paid mortgage insurance. So that's a huge
Wow.
savings. That could be up to not having to pay the mortgage insurance. That's huge that have that paid
Absolutely.
by Nevada State Bank.
Another bill down. You don't
Yeah,
have to worry
right.
about. Yeah.
Exactly. I do know they also offer reduced lender fees.
So is it no
Um,
PMI that you don't have to pay?
exactly.
Okay.
Exactly. And then they also offer up to 3,000 in closing cost credits available as well. Again, all this is informational. Definitely check with Nevada State Bank to verify all of this if you're interested. I'm just giving information that I received during a training. Lastly, I want to talk about the Clark County Welcome Home Community Land Trust. Now, this is a newer program that I just learned about recently and actually went through the kind of training just so I could get more information. And basically, why this may be beneficial to some buyers is because essentially, because you're not purchasing the land at full market value
Okay.
price, you can get the house generally more affordable, right? Because the land is owned under the Clark County Trust. We'll get more information on that program for you guys. So yeah, those are the different programs that I know about. I'm going to turn it over to Latasha to talk about the investor loan option that she has.
Great. So that's great information. Again, like Shalita said, reach out to her
Yeah.
if you want to know more information about those programs. So I'm going to excuse me, on DSCR loans. So DSCR is debt service coverage ratio. Now, these are only for investors. Okay, these are only investment loans. They don't look at your job history, your W-2s and stuff. Basically, what they're looking at is, can you cover? Will this make money? Okay, so investment is about making the money. So will this make the money?
Mm-hmm.
Is it enough to make the money? And usually with those, it's usually about a 20% down,
Okay.
to put that on it. Your credit score is usually about a 640 or higher. Remember, it's different lenders require different things as well. So it's usually a 640 or higher, and the interest rate sometimes can be higher as well with that. And also, bear with me, I have a little bit of notes because it's a lot to uncover here. So, for example, your rent. So if the rent is $3,000, right? And then the payment is $2,400. That's 1.25 ratio, which is, you want a one to cover. So
Mm-hmm.
that's going to cover it. And how you get that ratio is, you will divide 3,000 into 2,400, and we do that's 1.25. So usually the people that use this DSCR, which is an awesome program, is real estate investors, rental property owners, self-employed investors, investors building a portfolio. Now, remember, you cannot live in this property at
Right.
all. So this is basically only used to invest. Okay.
So that's somebody who's looking to maybe rent their home
Right,
out.
right. And you got to also keep in mind that you need reserves. And what reserves are is, you want money because there might be vacancies. So if you're renting a place that's $2,000 a month, for
Mm-hmm.
say, you're going to lose that 2,000, okay, because it's vacant.
Right.
So the reserves is, they want to see, the lenders want to see, do you have about 12,000, 15,000 in the bank in case things happen, because we all
Right.
know things happen,
Yeah.
okay? So the main thing is, you want to be able to cover the PITI, which is the principal, interest, taxes, and insurance. Okay, so you want to make sure the cash flow. Everything about DSCR is all about cash flow. Like I said, that's all they care about. So all the other stuff, how long you been at the job, do
Mm-hmm.
you have this and that's basically, that's not really their main concern at all. So if you have vacancies, um, that's no tenants, no rent coming in. A lot of lenders would not approve that, because they want to see that, there's someone
Right.
there, and that you can bring in. So that's basically what DSCR. I'm going to touch on one, the bank statement loan. I'm just going to touch on this pretty briefly. A bank statement loan is another program a lot of people don't know about. Again, we're bringing you information
Yep.
of loans people don't know about. A bank statement loan is a great option for people that is self-employed. Okay,
Yes.
so
Or
the
tipped employees, right? So that's a
yes,
lot of our population here in Las Vegas, right? So
absolutely.
that's a great program. They qualify you based off your bank
Yeah,
statements,
and you might
essentially.
not qualify for a traditional loan,
Right.
but with the bank statement loan, you will qualify for it. So instead, you don't have to rely on the W-2s or tax returns to determine your income. The lender can look at bank statement and analyze the deposits coming into your account to determine qualifying income.
Yep.
Now, let's be very clear about this. That does not mean the lender is looking at your bank statement and saying, "Oh yeah, you got this money in here, you qualify." There are specific guidelines that you have to have with the past accounts. They want to see that's coming in, what's coming out. They want
Mm-hmm.
to make sure that you have that as well. And with these, your credit score might be a little higher to for this, maybe
To
about
qualify.
yeah,
Mm-hmm.
to qualify 640, 660 again. Get with a lender, find that out to make sure. You might have to put a little more down.
Mm-hmm.
Maybe 30%, 20% down.
Yeah, again, you'll verify that with the lender,
Absolutely.
whichever lender you decide to go with. But we're just providing information on different various programs that you may or may not have heard of that can be beneficial to you or someone else that you may know.
Absolutely. Oh, I want
Um,
to touch on the DSCR. I'm sorry to
yeah,
cut you off, Shalita. So with the DSCR, one thing I forgot to mention, is very important. So when I said the 20% down, so this is the thing. If it meets the 1.25 ratio, the
mm-hmm.
one ratio 1.75, again, different lenders may require different things. Then you 20%. Now, if you have a circumstance where the rent income is actually lower than the mortgage, then you will probably should put down about 30% to make sure you cover that. Some lenders might approve that and some may not, but you would have to definitely put down a higher percentage to make sure
Right.
that's covered.
Okay.
Awesome. So let's get you to our market minute. All right, now let's get into your market minute, brought to you by Store Title. Here's what's happening in a Las Vegas market as of August 10th. Currently, inventory is at 12,391 homes. So buyers have more options to choose from. Median days on market is about 63. That tells us homes aren't necessarily flying off the shelves. Sellers need to be strategic with pricing and presentation. The median list price is 549,800, and the average price per square foot is around 271. And here's the big takeaway: this is not a market where buyers have to rush just because they found a house. There is room to shop, compare, negotiate, and potentially ask for concessions depending on the property. For sellers, though pricing matters more than ever, if your home is overpriced, buyers have plenty of other options. So whether you're buying, selling, or investing in Las Vegas, you need a strategy, not just an estimate. Thank you. This is your market minute.
All right. Thanks for covering the market minute. So let's roll right into our behind the door. I think everything we've covered today has been great. We've talked about various different lending options, various different down payment assistance
Mm-hmm.
programs. I think one key takeaway is that one no from one lender is not a no to your home ownership journey.
Yes.
I think that is one thing that we really want to make clear in today's episode is that one no is not a no
Mm-hmm.
forever.
And different lenders require different things.
Yeah,
And
different fees, different
yes.
products, different things that may be available. So
Mm-hmm.
shop, get out there, find someone that you trust, and get valuable information that's beneficial to you.
And remember, if you really want that home, and that's your goal, work towards it.
Mhm.
Work towards it. Don't say, "Oh, I just can't do this because I don't have enough for the FHA, the conventional." It's okay. That's why me and Shalita are here to help you get through the process and send you to some great lenders. If
Yep.
that's your goal, you can do it. There's no reason why none of us can buy.
Right. If
Everybody's,
that's your goal.
yeah, if that's your goal, and
Yep.
everyone's goal is differently,
Yep.
but that's why we're here to help you.
Yep. Um, I'd say our golden key for today's episode is, knowledge certainly opens doors, right? Having this information so that you can make a sound financial decision that's beneficial to you and your family ultimately. So yeah, I would say, thanks again for joining us on today's episode. I hope that you um, heard something today that either benefits you or benefits someone else that you may know.
And if you have any more questions, just reach out to us.
Yes,
And remember, every conversation is a step closer to your next set of keys.
from hospitality to homes.
We're opening doors to your future.
This
This
has
has been
been Keys
Keys and
and
Conversation.
Conversations.
Thanks for joining
Joining us,
us.
and we'll see
See
you
you
next
next
time.
time.